Welcome back, everybody, to Andy the Banker Show. And today's episode is my intention revealing to all of you on how I'm going to be investing the next couple months. All right. We have the election coming up. And with the election coming up, there's going to be a lot of uncertainty. In case you guys were not aware, October is actually the worst performing month in the S&P 500 during an election year. If it's not an election year, it's typically September, but during an election year, it's going to be October. And here's how I'm going to be playing that. During the next couple weeks and the month or so, I'm going to be trying to be as aggressive as I can in my investing journey. All right. Now, the reason for this is going to be that there's going to be increased volatility because there's increased uncertainty. We have no idea who's going to win the presidency. Either it's going to be a Democrat or a Republican. We do not know. And when there is uncertainty, that is something the markets do not like. All right. And the markets are okay with bad news. They're okay with good news, but they are not okay with not knowing who it might be the winner. Now, after the election, my thought process on this is that we don't have any big news coming up after the election. We don't have the next biggest worry. And because we don't have a big worry that's set to come up after the election, I'm thinking it's going to be smooth sailing. The next few weeks up until the election, my plan is to put in as much extra funds as I can into the stock market, into the four stocks that I have, which is Microsoft, Chipotle, Costco, and Google. And then after November, I'm essentially going to be letting my stocks ride and then just dollar cost averaging my regular amount into the stock market, which does vary month to month. Now, the one thing, it might be a controversial take on this, but the one place that I am really not a big fan of, me personally, with my own money, is cash. All right. I am just not a big fan of cash right now. Like any cash I have, I'm trying to disperse it to different type of assets. Like the why, you might be wondering, why is the reason for that? Is because we have November Fed meeting coming up and December Fed meeting coming up. Now, I am no fortune teller. I have no crystal ball, but on both of those meetings, the market is expecting both meetings to have a lower rate drop, right? And if the rates drop on that, your yields on your high yield savings account, they're going to be lower yields. Instead of you getting, say, a 4 to 5% yield on your high yield savings account, you might get a 3% yield, maybe a 2% yield. We just don't know about that. And because of the one, lowering of the yields, and two, one of the things like I think about high yield savings account is that it's a good way for me to build use it as an emergency fund, but I don't think of a high yield savings account as a wealth builder. I'm sure there might be exceptions. Some people use it as a wealth builder. But for me, the way I see a lot of people use their high yield savings account is mainly just as an emergency savings fund. Now, I used to be one of those people that used to put 20,000, 30,000 into my savings account and think that was investing, right? The part about high yield savings account is that it has a set yield that you already know what it will be. And more often than not, it does not perform as well as other asset stocks. Now, yes, during certain years, it can do well. And as an emergency fund, it can do well. Now, I'll let you guys on in a little secret here. I do have one unfair advantage that not everybody has in this room, which is that I, I have a safety net. Luckily for me, fortunately for me, I live 1 hour away from my parents, so they don't live too far away from me. And if the worst case happens, I lose my job or some sort of crash happens, I need some sort of liquidity, that I do have my family that is close to me, that they can help me financially. And as a result, I know not everybody is in that shoes, right? Not everybody has the privilege to be able to take on additional risk like me. Like a person like me, somebody that has admitted that they are not a big fan of cash, that they don't like cash at all. I am essentially putting all of my liquidity into the stock market. Now, could I crash and burn? Absolutely. It's definitely possible I could crash and burn, but I'm willing to live with that risk, right? One of the things that people ask me all the time is, Andy, are you not worried about if we have a crash, right? And this is something that I don't wish upon anybody. I don't wish for a recession. I don't wish for a crash. But hypothetically, let's say there was a crash to happen. Basically, my stocks get hammered 50% downward. I, you know, I will be a little bit excited to buy more The reason for this is because I got decades to invest. All right. I am 27 years old. I have about another 4 to 5 decades of investing in me left. And during that time, you're telling me that I get to buy these amazing companies like Microsoft, Costco, Google, Chipotle for 50% off, 40% off. That is something that is exciting for me. I would be ecstatic to hear those news compared to somebody like me who is buying things at almost all-time highs. Because it does worry me that I am buying things at all-time highs. And as a result, that's why I dollar cost average. And dollar cost averaging, in case for people that are newer, is essentially I buy stocks instead of one at big time, I buy them periodically. Every 2 weeks, I buy into the stock market, whether the stocks are going up or stocks are going down. Now, you guys might be wondering why are is the stocks at an all-time high? Because it's interesting. Stocks are at an all-time high, yet the sentiment for stock market doesn't seem so bullish. Like if when I talk to other investors, they seem a little bit fidgety, right? It's not a case like 2021 where everybody is pretty ecstatic. However, I am utilizing this case as a buying opportunity. Let's take a look at the S&P 500 performance, all right? The last couple years that we lowered rates, for example, we lowered rates in 2008, stock market ran off. We lowered rates in 2020, stocks ran off. Now, does this mean that every time the rates get lowered, the stock market is going to run off to new highs? Absolutely not. But I am just trying to make a point here that in the previous years, it has gone so. Just does not mean that it's going to do so every single year. But it's an interesting point out. Now, another thing that's working out in my favor, all right, another statistics that's working in my favor, again, past performance does not indicate future. It does not automatically mean the future is going to be the same. However, fun fact for people that are watching is that in the last 6 election time periods, it doesn't matter who won, a Democrat or Republican presidency, the stock market, the S&P 500, actually went up by 10% or more. So we think about like 2004, right? When the presidency had been finished, the stock market ran up by 10% or more. We look at another time in 2008, right after the November, the stock market went up 10% or more. Same thing in 2012. Same thing in 2016 with the Republican presidency, and then with the Democratic presidency in 2020, stock market again went up by 10% or more. And that is another thing. Again, the previous past performance does not indicate a future performance, but that is a good statistics to have on my side when I am investing heavily this year before the election is occurring. Now, one of the things that I really like about lowering of the interest rates is that it is a net positive for the stock market because here's why. With lowering of yields, there is less competition for the stock market. All right. I'll give you an example. When the rates were around 5% on your high yield savings account, people were okay. You were getting a decent size interest rate return with a 5% risk free, essentially just getting from the bank, right? But when the rates go a little bit lower, when you're starting to get to 3% or 2% yields on your savings account, that is when people start maybe thinking, what could I perform better than this? Especially, and that those people that might be disgruntled with the 2% or 3% interest yields on their savings account, they may put their money elsewhere, maybe into a little bit more volatile investments such as bonds or stocks. And the vice versa is true in the inverse. Let's say the interest rates were going up, for example, right? Let's say instead of a 5% yield, you're getting an 8% or a 9% yield. Some people would be extremely happy with an 8% return or 9% return, risk-free that you're just getting from the bank. As a result, in that case, when the interest rates are rising, it's worse for the stocks because stocks have to compete with the risk-free rate of 8% or 9%. With the lowering yields that we're having right now, that lowering yields environment, we just lowered it in September. We're expected to lower in November and also expected to lower in December, however, not set in stone. It is definitely good news for stock investors like myself, and I am very bullish about it. And as a result, that's why I am almost fully invested into the stock market. Now, I totally understand the past 3 months, we've been having a choppy month, right? I am in my portfolio, I'm down around 2%. on my portfolio. However, when I buy into my stocks, I ask myself the question like, Andy, if your stocks went down 10%, 20%, even 30%, will you sell out of it? And if the honest answer is yes, I will sell out of it. I will get nervous. And I used to be like that. Then I will tell myself, hey, now is not the time for you to buy this stock. But if you ask me, all of these four stocks that I buy into, Microsoft's, Chipotle, Costco, Google, if they got cut down 10%, 20%, 30% even, I am very ecstatic to buy more. The only time where I might actually sell out, and I told myself this when I bought into these stocks, is if they report some sort of fraudulent activity. For example, there used to be a company called Waste Management. Now, Waste Management was a company where a lot of people were bullish because it was a company that they took care of your garbage, and people were excited because garbage is something that everybody needs. It doesn't matter who you are. Every single year we should have be expecting more garbage and more garbage because there's more people essentially. However, one day they report their earnings and we find out they've been reporting fraudulent activity, meaning they've been making up the numbers. And in cases like that, I've learned from Waste Management shareholders that if my four companies were to have similar scenarios, that I would be selling out of those four particular stocks. Now, one thing that I did want to mention to newer investors is that this is something that since 2020, I've been seeing a lot more happen, which is that we get the newest shiny object on the market. For example, back in 2020, we used to have Tesla as the newest shiny. Like everybody was talking about, hey, let's get into Tesla because of how much it had gone up. Right, people were excited to buy Tesla, and look at Tesla right now. It no longer has the same type of craze that it once had. And then after Tesla was Nvidia, right? When we had the Nvidia craze, then we had the Kava craze, and now and today we happen to be going through the Chinese stocks. We talk about Alibaba, the Tencents, the BYDs, the PDDs. All of these Chinese stocks have gone up a tremendous amount within just the last month. For example, Alibaba right here, 41% in the single month. And typically in my TikTok chats, people have been asking me, like, Andy, are you buying into this craze? With the stimulus that China is going to be coming out soon, are you going to be buying into Alibaba? It's the same thing I will tell the Nvidia investors, the Tesla investors that have asked me the same question, which is that I do my best, I try my best to never chase the shiny object. All right. And there's a particular reason for that. For example, Alibaba has gone up 41% now, right? The chances, let's say if I were to buy in again onto this stock at $114, how likely is it for Alibaba to grow another 41% in a single month? My thought process on this, and I could be wrong, it could go up maybe, let's say, another 41%, right? It is possible. But my thought process on this when I'm investing in companies like this is that once the big gains have gone, I missed out. And I am very happy to live with that. Because when something like this goes up real suddenly, real quickly, into a big, essentially just like a rocket ship going 41% in a single month, it can also have the inverse effect real quick as well. That it could come down maybe another 10%, 20% within a short amount of time. And that's something that I tell myself. I don't try to chase the new shiny object because after the Chinese stocks, it'll be something else, something different in the stock market that's gonna be rising up tremendously, just like Alibaba has done this month. And then for our newer investors here, I just wanted to do a quick demo and show you guys how do I buy stocks essentially, or how do I deposit money into Robinhood. I have already linked my checking account into Robinhood, and let's say I am transferring $1,000 so that I could buy it in Monday's market open. 100, I'm sorry, $1,000. Individual, yep, my individual IRA account. Review transfer. Let's see, transfer amount, continue with standard. I am able to do a standard instant transfer or do a standard transfer. For me, based on the amount that I have in Robinhood, they're both almost the same. Basically, it's instantaneous money. So I do standard transfer, and you will see soon. Oh, I do get a $10 boost. A nice thing about Robinhood, once I have the Robinhood Gold, I don't know if it's for regular Robinhood Gold users and regular Robinhood users as well if they get the 1%. But for me, I do get the 1% boost. That's always like nice to get free money from Robinhood. Initiated, that is great. Let me see here. Done. Exit out. Then immediately I have buying power of $1,000 that tomorrow's market open, I am able to go in and buy more stocks. I am thinking right now, if Costco has more of a pullback, I am definitely getting in there. Chipotle is something I'm excited about. Microsoft, if it has a pullback, I'm looking essentially right now, I'm looking at whichever stock of my four companies has the biggest pullback. I'm getting in there, especially until that election time period. We're gonna have a little bit more volatility, a little bit more uncertainty. I'm really excited to be in the stock market, you guys. And thank you so much for watching Andy the Banker Show. Besides my YouTube, I am also on TikTok as well. I have about 12,000 followers on TikTok, and I post on there daily. So if you're interested in knowing more information like this, feel free to check out the TikTok. Thank you so much for watching Andy the Banker Show, and we'll see you on the next episode. Thank you very much.